Hello, everyone. Welcome back to another episode of Decoding IPOs by the Finance Investment Cell of Kirori College. This is the series where we break down every major IPO in India, making it easy for you to understand and invest smartly. Today, we are decoding one of the most awaited IPOs of 2025, LG Electronics India Limited. Let's find out if this global giant's India story is worth our attention. First of all, I would like to dive into what is an IPO. So before we dive into the numbers, let's quickly decode the basics. An IPO or initial public offering is when a company offers its shares to the public for the first time. There are two types, fixed price issues and book build issues. LG's IPO is a book build issue, which means investors can bid within a price band, in this case, rupees 1080 to rupees 1140 per share. And remember, this issue is entirely an offer for sale, meaning no new money goes into the company. Existing shareholders are selling part of their stake. Next up, we have the IPO details. The LG Electronics India IPO opened up for subscription on October 7th and is closing on October 9th, 2025. I would like to show you the timeline. This is the timeline here. All right. It is a massive 11,607 crore rupees issue. It is offering 10.18 crore shares. So over here, if you can see here, the issue price band, and then we have, yes, here, over here. All right. The face value is rupees 10, as you can see, and then the final issue price has been set around rupees 11,040 per share. Then the lot size is 13 shares, meaning a minimum investment of rupees 14,820 for retail investors. Then if you're a small HNI, the minimum bid is 182 shares, worth rupees 2,07,480. Then here's the timeline as well, 7th October, 9th October. Then the allotment we have 10th October. Initiation of refunds is 13th October. And the tentative listing date comes up to 14th October. Yes. It was incorporated in 1997. LG Electronics India Limited manufactures and sells home appliances and consumer electronics, from air conditioners and TVs to washing machines and refrigerators. They have two major manufacturing units in Noida and Pune, supported by 25 warehouses, 51 branches, and over 30,000 sub-dealers across India. This company also boasts 1,000 plus service centers and 13,000 engineers serving customers nationwide. Then the philosophy, life's good when we do good. Next up, we have the financial performance, the company financials. In FY 2024 and 2025, revenue rose 14% and profit after tax jumped 46% to rupees 2,203 crore. The EBITDA increased to rupees 3,110 crores and they operate with zero debt. Yeah, they operate with zero debt. Then the key metrics are ROCE 42.91%. We have RONW 37.13%. We have the PAT margin. Yes. Next up, I would like to show you the GMP, Grey Market Premium. So for the GMP, the Grey Market Premium, let's talk about it. It's the unofficial price at which IPO shares trade before listing. So for LG Electronics, the latest GMP stands at rupees 310, last updated at this time. Then we have that means that the stock is expected to list around rupees 1,450, a premium of roughly 27% over the issue price, as you can see over here. Next up, we have the IPO subscription status. For the QIB, we have it as 4.88. The NNI, it's 15.66. In the retail, we have the 2.71. And for employee, we have it 5.80x. So overall, it was subscribed 6.10 times as of October 9th. Here. So what's our verdict on LG Electronics India's IPO? Let's decode both sides. As you can see on the screen, for the strengths, we have that it's backed by global giant LG Electronics Inc. It's debt-free and operationally efficient. Next up, and for the last, we have the huge distribution and service network across India. Then for the risks, we have that it's a pure offer for sale, as I told you all before, so no new funds enter the business. Next up, valuations are on the higher side, as you can see over here. Then the market volatility may affect listing performance. Then we have the dependence on consumer demand cycles. So in short, it's a solid company, but the IPO is aggressively priced. So while short-term listing gains look likely, long-term investors should assess valuations carefully. For the final verdict, according to experts and financial portals like we saw, Chittorgarh and InvestorGain, LG's IPO is fundamentally strong but not cheap. Given its brand strength, profitability, and grey market buzz, it's suitable for medium to long-term investors, not just for quick listing gains. So if you believe in India's consumption story and trust the LG brand, this IPO could be a good addition to your portfolio. All right, so that wraps up our breakdown of the LG Electronics India IPO. I hope you learned something new and found this useful. Do share it with your investing buddies and subscribe for more in our Decoding.